Good. I'm good. Okay. Awesome. Thank you for and as I said, if y'all come across somebody say if they have problems logging in, the meeting ID. I need you to turn the music down, please. The put the meeting ID in or copy and paste the link and put it in your browser. So if somebody has a problem, let them know of that. All right, y'all. So I'm gonna go ahead and get started. Like I said, share this link. Thank you to everybody who's here. And guess what? We don't want to waste y'all time. So we're going to go ahead and get started with this information because we got a whole lot for y'all tonight. Make sure you got a pen and paper. Take copious notes. Why? Because I want you to learn something today. We want y'all to learn something today. So I'm going to go ahead and get started in a minute. All right? Did y'all share this link? Did y'all share the link? Huh? Did y'all share a link? Okay. And then we got some professionals on the line as well. We got some real estate agents. We got some doulas on here. I know I probably said it wrong. My bad. We got mortgage brokers on the line with us tonight. Why? Because they want to make sure their clients get this information so we can make it better for them. Why? Because they want to sell homes, right? So shout out to all the professionals we have on the line. Shout out to everybody today on this Juneteenth, okay? Let's do it. So I'm going to go ahead. I'm going to start to share my screen, y'all. Give me a second. Go ahead. I got this MacBook, y'all. I love this MacBook, but this thing like to play with my emotions sometimes. So we're going to start right here. Give me a second here. Come on, where you at? We're going to start right here from the beginning. Hello to everybody who has joined us here in virtual land. Like I told y'all, grab a pen, grab your paper, take copious notes, and share this link with somebody that you already care about, okay? Let me just start by introducing myself, y'all. My name is Tyra Jacqueline, a.k.a. The Creditator, okay? Some of y'all old enough to know where I got that from, okay? And for some of y'all going to think about it. Y'all going to laugh later, okay? Let me give y'all a bit about my background. I do have backgrounds in real estate, insurance, and social services. I used to work with the drug and alcohol population who were also adjudicated, and I worked with a lot of children from ages actually 2 to age 19 all around the city of Philadelphia. And most recently, for a decade, I worked for y'all lovely federal government. Y'all favorite 3 letters of the alphabet come April 15th. Some of y'all gonna get that now. Some of y'all gonna get that later. But I hail from the wonderful city of brotherly love, Philadelphia, home of the cream cheese, home of cheesecakes and tasty cakes, y'all. Just in case y'all didn't know. All right, so like I said, I'm gonna learn y'all something today. That is our goal. So we're gonna talk a little bit about credit today. So what exactly is credit? Credit allows you to leverage what's called other people's money or OPM. Why is credit important? Because your credit is looked at as your character. Are you trustworthy? That's all banks care about. Are you going to pay us back? Okay. Please understand there are 2 parts when it comes to your credit. It is your credit report and your credit score. They are 2 separate entities. However, they do need to be worked at the same time. So first and foremost, when it comes to your credit, you want to clean that credit report up. The very first thing you need to do when it comes to cleaning your credit report is getting rid of all the old information. So you're probably like, well, what are you talking about? What old information, Tyra? I'm talking about your old employers. I'm talking about old phone numbers. I'm talking about old addresses. Guess what? You should have none of those things on your credit report. The only thing you should ever have on your credit report is what's going on with you today. Okay? No old information. Why? Because you have old accounts tied to your old information. That's what's keep pulling your credit report down. Right. So if y'all didn't know, there is a such thing as algorithm that adds up to your actual credit scores. And this is what it looks like, the 5 factors of your personal credit: 35, 30, 15, 10, and 10. And I'm going to actually explain that to y'all in a little bit more detail. So let's start with the biggest chunk of your credit scores, guys, which is 35%. That 35% is your payment history. It is the number one thing that's going to pull your credit down. So pay your bills on time. But let me give y'all a little bit of facts about late payments and what they actually do. One late payment undoes 3 on-time payments. It takes 9 months to recover from one late payment, and it can drop your credit score anywhere from 50 to 100 points. That's why it's important to always, always, always pay your bills on time. Do y'all see what one late payment do to you? Imagine 9 late payments. Imagine 20 late payments. Do the math, guys, okay? The next part is 30%, which is credit card utilization. This is very, 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 very important. Why? Because there's a myth out here that people think that all your credit cards should be 30%. No, that is incorrect. 30% actually means that the balances of all your credit cards should be no more than 30% of the total of the limits of all of your credit report. Let me explain to y'all that in simple numbers. Let's say you have 2 credit cards with 500 limits. Well, we all agree that 500 and 500 is $1,000, correct? That means each of those 2 credit cards, the balances of those should be no more than $150. That means 150 and 150, that equals 300, which is 30% of 1,000. We all agree on that, correct? So your credit card utilization should be no higher than 30%. There's actually a formula. That is the formula right there where it says credit limit times 0.06289. That will also tell you where you need to bring your balances to for your credit cards. The next biggest chunk is account history, which is 15%. Guess what, y'all? Old credit is good credit. Make sure you are never closing old accounts. That means old credit cards. If it's not paid off, do not close it. Don't put your credit cards in the drawers. Don't call the company says cancel these cards. No, the older the credit, the better. Okay. Something that's very, very, very important is inquiries. You want to limit inquiries. Anytime you are getting hard pulls on your credit or hard inquiries, it's the same thing. That means you're applying for new credit for these guys that are actually pulling your credit. New inquiries is 10%. And when you got too many inquiries, you look desperate for credit. You don't want to do that. But unfortunately, just about every time you apply for a new credit card or a new loan, no matter what it is, they're going to pull your credit. You want to keep those inquiries under 5 each year. Yes, they do come off after 2 years. The rule of thumb is to keep them under 5, and 0 to 2 looks the best. But guess what? If you have hard inquiries on your credit report, yes, they can be removed. I don't care what nobody tells you. Yes, inquiries on your personal credit can be removed. It is tied to an account that is not open. Okay? Don't try to remove inquiries that has a open account. Also, the last 10% is what we call credit mix. You want a mixture of installment and revolving accounts. Installment accounts is like your mortgages, your car notes, personal loans. These are the type of loans where the amount that you pay each month don't change. But then you have revolving accounts as well, which are credit cards and lines of credit. Why they're called revolving? Because basically think of those as a revolving door. You're going to use them, pay them down, use them, pay them down. That's how it works when it comes to revolving accounts. You don't know why that went backwards. And guess what? We now got these things, well, they're not new, but they may be new to somebody here that's online, called alternative credit lines or alternative lines of credit, alternative trade lines, alternative self-reporting lines right here. And these are things that we all pay for. These first few things we all pay for, all of us that pay rent. We all pay utilities, streaming services, Pandora, Hulu, Netflix. Guess what? You can add those things to your credit reports as well to help you increase your credit scores. And I am not talking about Experian Boost. Do not do Experian Boost, okay? So the next thing, do me a favor. If y'all are learning a little something from what I'm showing y'all so far, do me a favor. Throw some fireballs in the chat. because I got some more information for y'all to help y'all increase your credit scores and save some money. All right. So another good thing that you can look at with increasing your credit scores that I recommend to all my clients, they are credit builder savings loans. Why are they called that? Because what you're going to do is they're going to loan you a small amount of money. You're going to make small payments each month. At the end of the terms, that money that you put into the account, not only is that company going to report that to your credit report to increase your credit scores, you're also going to get the money back, hence savings part of it, minus their interest rate, guys. So you're building your credit and you're saving money. How good is that, y'all? Now, when it also comes to credit cards, another way, instead of having your own credit card, which you need to have, I'm gonna come back to that, you can also be an authorized user or a co-signer. And then there's another big thing out here with credit cards that many people are not aware of, called a care credit card, used for medical expenses for yourself and your animals as well. Now, when you are applying for credit cards, here is some of the secret sauce when it comes to credit cards. You need to learn what credit bureau that specific bank pulls from. Also, only get credit cards that report to all three credit bureaus. Make sure the credit card is helping you. Okay? Know the interest rate beforehand. And please avoid credit cards with monthly fees at all costs. And if you can, you may not be able to always avoid this if you are just building credit or rebuilding, or if you have no credit. Try to avoid the ones with annual fees as well, if you can. But avoid the ones with the monthly fees at all costs. Do me a favor. Was that some fire for y'all? If that's some fire, throw some more fireballs in the chat. I love fireballs, okay? Just to let you know. All right, next thing. But I want to tell y'all something, because we were taught, and I don't know about y'all, but I was, and I know some people was taught that credit cards are evil, they're bad, we should never get them. We were taught those things. And if you were taught that as well, do me a favor, throw a 1 in the chat if you were taught that credit cards were bad. But I'm here to tell you, credit cards are the bomb, the good, in the good way, okay? Credit cards are excellent. Why? Because they are 90% of your credit score. And I don't care what anybody tell you, strong credit profiles have credit cards. We need credit cards to build a strong credit profile, period. Okay? All right. Hope y'all got that. Let me teach y'all a couple of credit card hacks other than the ones that I just taught y'all. Number one, when you are paying your credit card bills, please make sure you are paying by the statement date, not the due date. See, that's how they get us. Okay? You want to pay it by the statement date because that's what's going to report. Also, try, if you're going to pay your credit card off in full, which is what we would like, charge your credit cards, pay them off in full if you can. You want to use what's called the 15-3 method. And let me tell you about the 15-3 method. You want to pay 1/2 of the credit card 15 days before the statement date. Pay off the second half 3 days before the due date. I might be saying that wrong. 15 days before the due date, then 3 days before the due date, or by the statement date, because the statement date is normally somewhere 3 to 5 days before the due date. That's going to make you look more responsible, guys. That's going to help increase your credit scores. And then remember, when credit cards see that you're being responsible, what they're going to do, they're going to increase your limits, and that's what we want. Okay, so remember the 15-3 method, guys. Okay. I just want to recap. Remember, 30% when it comes to credit card utilization, that is 30% of your credit score. How you stay responsible with that is making sure the balance of all of your credit cards are 30% of the credit card, and not 30, each card being 30%. So add up, it should, all the sums, the balances should be 30%, with the limits 30% of the limits. Okay. Now, few more credit card hacks before I go. Every 6 months, I need y'all to do these 3 things with y'all credit card companies. You can ask what's called a product change with your credit cards that has better terms. This can have a lower interest rate, you get more perks, things of that nature. By doing a product change, you will keep your payment and your account history. Okay. That way, nothing's changed, so you're not losing anything. You can also ask for a reduction in an interest rate. This may be permanent or temporary, but either way, you're going to save money. Also, ask for an increase in your credit limit. Y'all do this every 6 months. Mark it on your calendar. What an increase in your credit limit is going to do is decrease your utilization when it comes to your credit score factoring, which is also going to increase your credit scores as long as you don't keep pushing the balance. Okay. So if that was some fire for y'all, do me a favor, throw some more fireballs in the chat. And when you are requesting these things, make sure you tell them specifically no hard credit pool. I want these things done with no hard credit pool. And if that person on the phone tell you no, or if they say I cannot do this, you ask for the supervisor. Now listen, you may not get all three, you may not get two, you may only get one, but guess what? It's something that's going to help you out. It's going to save you money, and it may just decrease your interest. Okay, so that's pretty much all I have for you guys right now at this time. Stop my sharing. So what I'm going to do at this time is pass the mic over to my good sis. But I just want to let y'all know what she's going to do right now. Miss Shakira is going to educate you about some services that not only allow me to be right here in front of y'all today to educate y'all with what I know, to educate and fulfill your minds, is also she's going to introduce y'all to some things that allow me to get an 11,000 collection off my credit report. Did y'all hear that? I'm gonna say that one more time. $11,000 collection account off my credit report that I forever will be grateful for. So without further ado, I'm gonna introduce y'all to my good sis, Miss Shakira. Shakira, are you there, ma'am?
Yes, I am. Hold on one second. Let me get the people to see me. Hey, everybody. I do apologize ahead of time for my lighting, but let me just thank Miss Tyra. Let's give it up for Tyra. If you know it, if you found that information valuable to you, drop the mic drop in my chat, please. Thank you so much, Tyra. Did you guys hear that? She said the services that I'm about to show you and share with you helped her get an $11,000 collection removed from her credit report. And if that's not mind-blowing, then I don't know what else is. And I'm going to share with you right now why Tyra is so excited, and I thank her so much. She